Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here, Curtis Skelton, jumping into the charts on this October 4th. So kicking off the next trading session here on Tuesday, the markets have had a tremendous up move, so to speak. The S&P is currently up 2.65%, just off the highs. Let me go to the intraday chart because the intraday chart is extremely fascinating. Here was where we gapped open, had a little bit of intraday consolidation, and the markets just continue to rip. And why did this happen? Well, we prepped each and every one of you over the last week to start accumulating and be ready to offload into the strength if we get a little bit of a couple day bounce. Now the markets are expecting the Fed kind of to pivot, but I don't think that's what's going to happen this meeting. Maybe there's somewhat of a pause or a slowdown, which is less dovishness. But remember, markets always forward look. So generally, the markets will price in any dovishness or pivots before it actually even happens. Now, let's just say it doesn't happen. This market goes lower. And I still think this market has a tremendous amount of risk to it. And the overall medium to longer term thesis is that we see a lot more downside. So nonetheless, we're loaded. We offloaded 13 positions today, as well as 2 day trades. We closed 11 winners, 2 losers. So amazing job. We are at new highs yet again on our swing trading accounts. So it is tremendous, the price action that we have been able to capitalize this year. Definitely well above 60% profit ROI this year alone. So if you've been partaking in the gains here at Trading Capital with us, then that is phenomenal for you as well. But let's just jump into the technicals. So you can see that ever since we made really this high back here in the morning, you've been just floundering sideways, consolidating in a range. Now, if we go to the daily chart, the intriguing thing is that here's your gap up still. But when you look at the daily, there's actually a fake print. And the fake print shows that we go down here to fill the gap. Now, typically fake prints, you never want to base your trading solely on a fake print. But when you see a fake print, you want to take note of that because that implies a likely scenario where we actually head down and fill this gap before making any potential substantial move higher. And that's kind of what I'm thinking. But typically there's a high probability of success when fake prints play out. The daily chart is showing that the price action actually went down there, but in all reality, you can see on the intraday basis, we would have to fill that gap in order to have that tail on the S&P, which leads me to the conclusion that there's a high probability that some point in the time we will eventually fill this gap to the downside. And you can see that that would pretty much negate all of today's rally, which is why I wanted to offload a bunch of our long positions. We did start accumulating one short, but still I wanted to basically sell into the strength of the market, because whenever you have a parabolic move of this nature, in 2 days the S&P has gone from 357 to 377 without any meaningful consolidation. You can see it better on the daily chart. You have to naturally assume that there might be some consolidation, especially when there's a massive gap down here on the charts, which does have a likely probability of being filled in the short term. So we'll come back at the end of the video just to see what the S&P 500 is doing. So far you do need this consolidation. I always like to watch the hourly chart intraday to see what type of consolidation. And this is actually very healthy consolidation, just right under the 200 intraday hourly moving average. And the more times you hit this level and stay in the upper range, the likelihood is that you break to the upside. Now there is a little bit of a technical gap here on the hourly chart at 378.76. So I think that probably, if you do break to the upside, will be your upside move for the day today on the S&P 500. Let's just take a look at the dollar to see what the dollar, how the dollar transpired today in today's trading session. Overall, if we flip to the 4-hour chart, that was the chart I like to watch. You can see that we had that breakdown, and I made a post and alerted the members saying the dollar was most likely going to fall $1 today, and it's actually fallen $1.27, which is why we had an exceptional rally to the upside, pretty much a broad market rally, because the fact that the dollar is falling, that means much more liquidity is now coming out of that safe haven, a little bit more less risk in the market. People are pricing in maybe a potential Fed pivot. So therefore, people are going to chase the risk and look for a little bit extra alpha and you're certainly seeing money flow. But just keep in mind that the dollar is still technically in an uptrend, a massive bull market. Yes, it was overbought on all metric, which is why we were shorting it and which is why we started accumulating so many longs. But it has had now on the daily chart, and it has fulfilled its downside move in the short term, but it has hit major support. You can see these pivot tops over here and this pivot bottom over here, which you've actually pierced. If I draw another line over here, you can see that it has hit these pivot tops here, and it's slowly starting to bounce. So the big question is, do we see a little bit more of a dip tomorrow and then a dollar bounce? If the dollar has a technical bounce, you're likely going to see the markets feel that bounce tremendously by selling off. So whether or not we have some poor economic data or a bad inflation read, there's going to be a catalyst that will send this dollar for a technical bounce, as it has in the short term completed a technical breakdown. And usually after a technical breakdown, you do get a little bit of a retrace and bounce up. So we'll just have to continue to monitor that price action on the dollar. If we take a look at the US 10-year yield, so yields are kind of mixed today. The reason the markets had a big rally, if we look on the daily chart, yields had a little bit of a sell-off, made a new low, and have now started rallying back. And you're actually closing inside of this tail, so to speak, with the next hour and a half. So it does make me think that we could potentially get a retrace up to the 3.75 mark. And again, if yields press up a little bit, that will certainly put pressure on the overall markets and make it a more risk-off environment. Sorry, the risk-on environment. If you take a look at the US 2-year yield, US 2-year yield is interesting because it does look like you've had this trigger of this little bit of a topping formation. Generally, this topping formation, you get a retrace back to this 4.16 mark. If you look on the daily chart, though, it does change the technical picture a little bit, because if we zoom out here, this is almost putting in a little bit of reversal. The fact that you faded all the way down to you pierced the 4% level, 3.99, and you've now pretty much reversed this, almost creating a little bit of a reversal signal. If this yields in the next hour and a half push up and close inside this body, that is not really going to be a healthy sign for the market, and that's why I wanted to offload a little bit of our short positions. Let's take a look at oil. So oil on the left screen here, this is the SCO. Oil is slowly approaching that level. It has had now 1-2 consecutive up days after a little bit of consolidation. You're approaching that resistance, but considering now that you're on the intraday basis, you're consolidating right under that resistance. That resistance, yes, it will be solid resistance, but you may get a pierce of that level if oil catches a little bit of a bid. So I'm going to be eyeing up a potential SCO short, but I probably won't be doing it right on that exact trend line. I would maybe wait for a significant pierce, just a little bit above the 50-day moving average, to see if I would consider adding or picking up the SCO. Natural gas has had a little bit of a bounce off that 200 daily moving average and this upsloping trend line. I say maybe it's a 1 to 3 day bounce before you head over. Now there is the possibility that you can retrace all the way to the neckline. If we got that retrace in a significant upside push, I would look to start to short by picking up the KOLD. Let's take a look at silver. We did offload a bunch of our silver plays today. I'll show you why. So silver actually has confirmed pretty much a breakout today. And now a couple of you might be thinking, well, if silver confirmed a breakout, why are you offloading your silver positions? And why are you selling your silver, half your silver, SLV, and your Pan American silver? Well, typically when a stock breaks out and confirms, people start piling in because they get that technical breakout signal. But often the price action will retrace to a support level, which could be all the way back down here to 1960 or, basically 1975. And if we get a retrace back to this downsloping trend line, I will look to accumulate more silver. And if you take a look at what type of percent, that's about a 6 or 7% drop from where we currently are, and that would be a tremendous buying opportunity on Pan American silver as well. If we flip back at PAS, because these have technically broken out, I am intrigued to potentially keep picking them up if they retrace back to support. Like we do have a technical gap fill down here at 1589, but even if you get a retrace back to the 1633, that would be your first level to continue to buy, second level, and so on and so forth. Let's take a look at gold. One of the reasons I also sold some silver and precious metals position is typically they rally together. You can see gold is hitting this massive downtrend channel over here. You have your major pivot high, pivot to pivot to pivot. Now, the odds are is that you are going to break through. That's kind of my theory. But I do think, considering that you've had a 1, 2, 3, 4, 5, 6 day move directly into resistance, it would be natural to expect a little bit of consolidation lower. It doesn't have to be that deep of a consolidation, but consolidation nonetheless, and then a move to the upside. So just because of this extended move into resistance, you would expect a little bit of a pullback in the short term. Let me just see if I can touch base on anything else. Yes, we did pick up some Bitcoin. We are long Bitcoin. I put out that alert last night. So if we look closely at the Bitcoin price here, we picked it up just under the 2017 high, which is this yellow line. Our average is sitting at about 19,622. It did dip a little bit early, but we are potentially setting up for a short-term breakout in Bitcoin. And when I show you this downsloping trend line connecting your pivot to your kissed your pivot through this action over here, you're potentially getting a short-term breakout signal. We will know tomorrow if Bitcoin can close above this downsloping trend line, and then if we get a positive price day tomorrow on Bitcoin, then Bitcoin does have the probability of potentially going all the way back up to about 25,000. So that's kind of my expectations if we get a confirmed breakout. Now, I may not hold it all the way up to 25, but it's certainly looking positive in the short term for an initial move up. And we'll just have to continue to wait and see how that shapes up. But certainly Bitcoin has been showing relative strength in comparison to the major indices. As the indices have been falling lower, like the S&P and the NASDAQ, Bitcoin's just been chopping in this side action, holding this major 2017 support level without ever technically breaking below that major support. So the key question there is Bitcoin has shown relative strength. It did sort of diverge from the S&P and the NASDAQ in the last basically 2 weeks. So even if the S&P doesn't go up and Bitcoin confirms a technical breakout, you may have a little bit of momentum just in the crypto space to carry and diverge the Bitcoin price action even if indices don't go up. So we'll just have to continue to monitor and watch that. Now we do have a tight stop loss, but ultimately we are sitting in the driver's seat at this point in time. The stop loss is very tight around 19.2, and we'll just have to continue to monitor that. Let me just see if I can touch base on anything else. But overall, yeah, 13 trades, 11 winners, 2 losers, new highs on our account. Exceptional job. Way to go. We also did pick up CELH on the short side. So CELH, one of the reasons I picked this up, let me just go over this with a little bit of technical education. So CELH, if you look at this pattern here, you have a left shoulder, a head, a right shoulder. You actually broke down and triggered this head and shoulders pattern, and now you're getting your retrace to the neckline. And initially during the day, you pierced the neckline, and that's where I picked my opportunity to short. We got the pierce of the neckline, and if this pattern is to technically hold, it's likely that you are going to get that reversal. And if we look intraday, this is the reversal we got. Basically, now you're making inside bar bearish consolidation just underneath that neckline. So the big question is we do not want this price action to close and confirm back above the neckline. If you do have that confirmation above the neckline, this trade we will likely exit and look for another opportunistic setup. But the downside calculation takes you to about 75.55. That would be a lovely 19% in our pockets. So let's just continue to see how this trade potentially sets up and plays out. But overall, nothing new to report there. Congratulations on all the trades we did do, and we'll see you on the charts tomorrow. Oh, I did say we would look back at the SPY just to see what's going on, but you can see the SPY is getting a little bit of a bid late in the day. So that is certainly healthy for any person who is long, but I do think this is just a natural range. I don't think you're going to break out of it today. You have 20 minutes left. There is a potential that you see maybe a short squeeze, but I do find that kind of hard to believe. Let's just do a quick volume check on the S&P 500. So today's volume was 72.55 million. So it's slightly below the average 25-day 95 million volume, but it will pick up with the last 20 minutes of price action. So all in all, great job on today's price action, and we'll see you on the charts tomorrow.